Perhaps I'll just start off with a quick round, an introduction from yourself, Nick.
Sure. Hi, everyone. I'm Nick Lally. I'm the COO and co-founder of Ravelin. Ravelin's a fraud detection company, principally using machine learning to detect card-not-present fraud and also other forms of fraud that merchants encounter, like account takeover as well. We work with both merchants and PSPs.
Okay, great. Thank you very much. So, I think from the first session we learned, there's a lot of interest around PSD2 and SCA and what role merchants play or will play in a post-PSD2 or SCA environment. And I suppose I'd just like to ask you the same kind of questions. What do you think, each of you in turn, do you think is the role that merchants specifically will play given the new regulations shift the liability and the legal responsibility for SCA to the issuer? And in particular, how relevant is AI to the merchant in that case? Perhaps I could start with you.
Yeah, so I would say that regarding SCA, SCA, of course, 3DS and two-factor authentication and all of that is a conversion killer. So I would say that merchants need to be careful with just going and just assuming that this will solve the problems, because it will actually cause more problems for merchants and for customers than the ones that are there now, at least for good merchants, I'd say. Mm-hmm. So having said that, of course, PSPs and merchants themselves and issuers have a very strong, I'd say, opportunity and responsibility to actually fight fraud on a transaction level. So instead of just using strong customer authentication for every transaction, there's actually exemptions that can be used, but those exemptions can only be used, and we can only apply to for using those exemptions if we keep below certain fraud thresholds, and we definitely should.
Okay, great.
Yeah, I think PSD2 pushes a lot of the power back to merchants. So if you are a low-risk merchant and you're already under the exemption thresholds, or with the combination of using 3D Secure, you see that you could get there quite easily, then you hold a lot of power. You can go to your acquirer and you can say, I want to be able to do that transaction risk analysis myself. I don't want to rely on you to have to do that for me. And then you're able to negotiate with all the acquirers. All the acquirers will be wanting low-risk transactions as part of their overall portfolio. So if you're very good at fraud detection and you can keep yourself in that low-risk category underneath the fraud thresholds of PSD2, then you became very in demand from all the acquirers, and you are able to negotiate better rates overall with the acquirers that you're talking to. So I think it pushes a lot of that power back into the hands of the into the merchant themselves, because those low-risk merchants can rely more heavily on the exemptions by doing that fraud detection themselves.
Basically, I completely agree that I also expect that merchants will more take over also the part of fraud and risk, let's say, detection, because we already heard in the last panel discussion that the idea of merchants having data which they can use, which they are but not forwarding to the issuers in order to make use of these kind of data. So there's always the risk that the issuer, because they have got only a small vision on the overall happening, might, let's say, decline a transaction or put stronger authentication methods upon them, which then leads to a, let's say, conversion loss. And there, I'm pretty sure we also saw this with, in the past years with 3D Secure 1.0, that there will be merchants which will then say, hey, I'm going to do this on my own because I have got a data set, because my market penetration is so huge, I can do better decisions with the data I have than relying on the issuer who might have smaller data amounts. Mm.
Yeah, maybe also they change the algorithms which payment method will be used. So direct debit isn't on the focus right now. Mm-hmm. So maybe a small comeback. I don't think it's a big comeback, but it may be a small comeback. The next question is, do it really will come in September? So I think most people will expect that there will some kind of extension it. Most merchants are not aware. On the other side, it is low. So we know it will come. So even if it's not in September, it will be March next year or something like that. So I think there will a slight change and maybe a little bit more power to the merchant who care about. And the other will have to find other ways to get a better convenience on the customers, because otherwise they will have a conversion killer, yes?
Well,
I think most people have covered stuff here, but the goal slightly shifts, right? Catching more fraud versus reducing friction, and that might lead to sort of different techniques and models and so on and so forth. But I would say that becomes front and center because you don't want to introduce friction to all these customers who are like, either are trusted or you can trust a transaction. So as you deploy models and techniques, you'd think a lot more about the outcome tailored towards reducing friction versus catching more fraud.
And perhaps just staying with you and addressing those questions that have popped up on the screen, directed at you, they're quite sort of technical and specific, but perhaps you could just comment on the difference, how different are similarities, JavaScript or Beacon on the front end different from others? Is that something that you can respond, or is that perhaps something better sort of addressed offline with you individually? And the second question, is there any reason why Similarity does not provide chargeback guarantee?
Yeah, so I can give brief answers, and if people want to follow up, happy to take that offline. So I'll address the second one first, the chargeback guarantee question, right? I don't want to be the one defining the outcome optimization for our clients. When you do a chargeback guarantee, you're trying to optimize for lowering losses because you bear the losses. And by the way, we are a part of PayPal now. PayPal already has a service which provides seller protection. And a lot of times that is inadequate for merchants who want a level of control. And so Similarity is sort of more lets the merchants, the banks, and payment solutions have more control over their destiny versus me handing you a decision. It's like, how do you control your own destiny better without going through a very complex system? Like, how do you simplify the interface so they can control this complex system and their own destiny?
Yeah, I mean, there's comparisons made in the questions or other questions with Risk.Ident and the approach taken there, right? So kind of an accept and take the whole liability type model. Is that, what's your position on that? And generally, the panel obviously can comment.
Yeah, so I mean, just one more thought on folks who do that, right? To me, it's like optimizing operations because, merchant has to have an operations team to review all these and make their decisions versus someone like Risk.Ident or Signified says, look, I'm going to take over that operation. I can do it at a lower cost than you. And I can do, it's almost providing insurance. It is less about technology. It's more about insurance and a business model. And I just feel like we want to enable better technology for merchants to control their outcomes versus being in the business of operations optimization or insurance business.
Yeah, that's quite clear understood.
Yeah, I think there's a real open question as well about how a chargeback guarantee model fits in a post-PSD2 world. So if you have to hit target fraud rates of 6 basis points or 12 basis points, the business model of these chargeback guarantee companies has been to charge anywhere from 0.5% to 1% of your overall transaction values. Now, no one's going to pay 1% of their transaction values if they're going to be mandated to use 3D Secure, which will stop most of the fraud anyway, or else their fraud is under that target threshold. So the question is out there, how do these companies, or what is their business model under PSD2 with European transactions?
Anybody else like to comment on this specific point on the chargeback model?
So I would say that from a model perspective, business model perspective, I think that it's going to take a big hit, I'd say. So companies that focus on processing chargebacks and make money from it really will take a big hit from it. Obviously, still there will be chargebacks, and still, as I said, so for us PSPs, we do handle a lot of chargebacks on a daily basis. So out of the top of my head, we've processed more than 100,000 chargebacks last year at Payvision, and they were mostly manually processed. So it's something that we've started to slowly, dial into our operations. So the DAI, autonomous dispute management, and it's going to help us, but it's not our business model. So, yeah.
Great. just address that second question, just in terms of clarifying what Risk.Ident does versus Ravelin, the different types of approaches and business models. Would you like to just clarify? It sounds like the point has been made that you're looking at the actual device itself, Risk.Ident.
Yeah, we have two approaches. So one is we're really a data source. So this is device identification, where we really are a data source. And the second is fraud case management. And there we are focused on orders and applications. So I think this is the most big difference between us, that we are focused more on orders or transactions as a kind of order, like an order from a merchant or a payment itself, but not the number of transactions in combination. So this is different. And there was a misunderstanding before, I think. So looking at ML, for sure, we're also using ML components. It's always a question in which environment do you use it, and especially on applications, I see limitations on it, because the number of data is not big enough. And the fraudsters are too fast, and the business case for the fraudster is too interesting to produce different data and behavior. Think of mortgages or something like that, where I don't think ML will help. But looking at transactions, for sure. But say something to Ravelin.
Yeah, so Ravelin was born out of another company that all the founders worked at, which was a taxi app based called Halo here in Europe. And what the problem that we faced there was everything was real time. When someone goes to order a taxi, you've got to allocate it there within seconds, and there's no way to put humans into that process. So we had to use our data scientists to build machine learning models to adapt and to get the results that we needed. And there was no way to have in-the-loop sort of human processes doing manual review. Our product today still allows someone to go in and put their human insight into that product through either manual reviews or augmenting our machine learning with rules. And we have an analyst dashboard which gives very in-depth visualizations about how customers are networked and linked to each other. But principally, we're working in a real-time environment where if a client of ours didn't want to have any manual intervention, then they could do that.
Mm-hmm. I just want to return to this theme of sort of data sharing and collaboration, which I think sort of came through in the first session. I think PSD2 and SCA kind of as a trigger for increased data sharing, particularly for merchant up to issuer, etc. Where do you think that's a correct view, or do you think we're going to see more data collaboration, data sharing, and how do you think that will manifest itself?
I'm quite sure about that, because the data pools are growing over the last 20 and 30 years. So there are data pools in the UK, in the Netherlands, in Germany, going on and on and on. And looking at fingerprints, we're building data pools. There will be data pools. Nobody likes it, but there will be data pools on biometric information, especially on the authentication sector. There will be data pools with the customer who want those data pools, just to say, okay, I have more control over my information, the information which is around me. So I think this will come, and the bigger question is, how long does it need us to work together? Because we need always some customers to work together, and we can give a stitch and say, yes, hey, how about we like to work together? Do we find together customers who do it? And typically this is a long time frame behind that. But I think this will be the next big step. Authentication, pools, and we are working together.
Mm. So I just have think that it's important to add something to that, because so one thing is to process, let's say, applications or things that you will have a human analyst, and for that really we must all work together and share information. But then when it comes to processing transactions real time, then there's always the problem that the data schemas do not match. So if I receive data from another PSP or a different acquirer, I will not be able to use it directly. So because some translation is necessary.
Yeah, that's a question of the labeling. How do we come to a part where we say we're talking about the same? This will be one part for the next 5 years. max, something like that. But I think we will come to a point where we're saying, okay, we define modi operandi, we define data points where we can interact, so we can exchange some data and then work better together. So fraud prevention is a part where we're all working in, and yes, we're competing with our systems. Somebody comes more from the machine learning side and says, yes, we're a little bit faster, and we're coming more from the investigation side and saying, yes, we have better graphical interviews and can do better reactions or whatever. But at the end, this is a competition about the customer, but not about fraud prevention itself. If we're sharing such information, we all become better. So, and this is so interesting. So I think, yes, agree, and can we find concepts to do that?
I mean, I might take a slightly contrarian view because there are a couple of insurmountable challenges to that data sharing. To your point, right? Device fingerprint, right? A probabilistic hash of 400 different features, right? The threat metrics is probabilistic hash is very different than mine. I'm inside PayPal, and 3 different groups have 3 different hashes. And how do you reconcile? And it's like some of these technologies have been around for 12, 15 years, and they haven't figured out a way to do that. So just from a practical standpoint, I think that's hurdle number 1. Are you talking the same language, and can you match?
Okay, just to think about, how about an agency just collecting those data, combining it with this person, and I say, okay, we have 3, let's say 3 device fingerprints from PayPal, from threat metrics, and from device identification, and it all is combined with the identification, with willing of the customer. This is okay, and then we can really say, okay, what come from which side, and tingle it up, and then we can put machine learning on, and the customer is aware of where is the problem. We try to come to a point where we want to give you protection from fraud. I say be always open. Where is the problem to be open to that to the customer? So maybe not we're directly working together, but maybe we're an agency.
No, but like I said, in theory it makes sense, but practically it hasn't worked so far. And I think the second challenge is just data privacy, right? There's level 1, level 2, level 3 data.
Yes.
PayPal is sort of the most hack-attempted website in the world. Beyond a certain point, just letting our data outside the network just means too much risk, right? So that is the second, because everybody's going to be protective of their customers' data. And I think it's not that it's theoretically not possible. Like practically, it hasn't shown to pan out that way, even though the capability to share and benefit to share has been around for the last 15-ish years. Again, I'm happy to be proven wrong because you want to make this a consortium effort. But so far, that hasn't proven to be the case.
Some parts of the data can be shared and can be reused, but I definitely agree. Fingerprints are really not a good.
Also, it's open to misuse as well. So we heard a gambling company that was sharing a blacklist database with other gambling companies, and they would put their high rollers on that blacklist database so they couldn't transact on their competitors.
Correct.
So it is open to abuse as well.
And I agree. It's complex. So it needed over 10 years to build a data pool from banks in Germany.
Correct.
So 10 years.
It's a long time.
It's a long time. But nevertheless, now there are 2 pools, and they're working quite well.
Yeah.
So it's a question: when do we start? And maybe it will take a long time. Yes. And especially for the risk of substitution of those data. Yes, we have to care about, and we have to think about. But who else shall do?
Yeah.
You
and how do you rely on someone else's fraud labels? If someone is, if their detection isn't as strong as yours and they've got more false positives, are you going to be negatively affected because of their performance? So that's another issue as well.
The idealist in me wants to agree with you. But the practical person is like,
and
I have to see this happen.
And I see how problematic it is. So I lead one of those processes for at least 10 years. So yes, I agree. And I see also the big companies really having problems saying, oh yeah, maybe the smaller participants will benefit from my data and so on and so on. But at the end, there are a few persons sitting there and saying, okay, if we just put parts together, we all will benefit. And maybe that's you and me. So, and I think this is really working on fraud prevention.
Yes.
Saying, okay, how can we deal with each other without the management always having too much things about, oh no, we have to compete, we can't give out anything. So maybe we'll find a way.
Interesting. I mean, potentially there's a role for wider regulation around this space. I mean, I don't know what your views are on that, but perhaps also, in terms of, do you think regulation is going to benefit in terms of SCA and that kind of PSD2? Is it going to benefit e-commerce? Is it overall a good thing for e-commerce in Europe, SCA? Do you think?
I definitely believe it is going to be a good thing, and for me, it's really because so there's this AI scare in general. So a lot of people are scared of AI and of trusting AI because it's not regulated, because it's not auditable. So if there's regulation in place, it's going to sort of force or enable companies to explain AI a little bit better, and the general public will accept it a little bit better by virtue of knowing a little bit more and trusting the regulators. So in my opinion, yes, it's going to allow AI to be more pervasive.
Yeah, so I also think that from my perspective, taking a look also at Germany, let's say Germany being a perfect example for people still liking, let's say, to more pay via cash and so on than with digital payment methods. And if I take a look at, for instance, my bank, up to now, since the 3D Secure 2.0 and so on was published, I still had, I was still asked for a password in order to make a purchase with my credit card in the e-commerce space. So there, I also had multiple discussions also within the family, like, hey, I wanted to purchase, but I forgot my password. I couldn't pay. So these kind of simple things, which always happen and where people didn't like to have this kind of additional authentication method. But now with the new regulations and when we are talking about strong customer authentication, it depends on how the, let's say, how the players in the market are going to implement it. I think if they are implementing it in a user-convenient manner, like making use of what we are used to do, fingerprint and so on, so to implement it in a manner that people accept it, then I'm pretty sure that this will also give a boost in the e-commerce sector.
One of the things I hope that happens as a result of PSD2 is there's a lot more data that's being passed over to issuers. So if you think at the moment there's on average around about a 10% decline rate of payments at the issuer level just because they don't have the data that the merchants do to make a call around whether a transaction is good or not. With a lot more data moving over to the issuers, if they become better at fraud detection themselves, then there'll be less declined payments. So hopefully, as a consumer, when you go and travel and you do the first purchase in Germany or buy something online from another country, your issuer is more likely to accept that payment and that there'll be more overall accepted transactions, hopefully. We'll wait and see.
Yeah, I misunderstand your question. Did you really ask if the new PSD2 increase e-commerce? If one ever did a new law increase something? Sorry,
I suppose
it make it more secure. And yes, maybe there's more trust in the sector and so on and so on. But overall, first of all, it's more work and will help the bigger ones, will reduce competition because the smaller ones have always problems with the new things. So I don't think so. It's quite good on several reasons, for data protection, for consumer protection, for reducing fraud, and so on. I totally agree to that. But helping e-commerce now, why? I see no reason for that.
I mean, I suppose on the basis of increased trust in the system.
Yeah, but
there are still
there's really a lot of customers
online, right?
thinking about that as I don't know. Maybe I'm one of the oldest here around. But all of my friends buying online, so and even the older ones. So I don't think this is really a point where a new law comes in place, and now there's a boost in trust, and 10% more will buy on the internet. I don't think so.
I see it slightly different. So on the one side, I agree. I also, if you just state it like that, a new regulation and now people are happy and buying more, no, that's not that will not be the case. But if I take a look at PSD2, not only from this RTS perspective, like strong customer authentication and so on, but from the other part, like opening up the market, like giving access to accounts, new players who can enter the market, having, let's say, are offering, let's say, better services, user convenience services. This might boost the e-commerce business as well.
If there's really better services, yes, I agree. Yeah, possible. Yeah, I see the.
That's the only part.
Yeah. But I see account services and something like that. Yeah. For new service.
If I just take a step back, right, and philosophically, like, free market versus regulation, right? So, I think internet has sort of distorted the consumer's view of what they're willing to give to get, right? Like, oh, Facebook is free, so basically they control all my data, access to data, who they share it with, and so on and so forth. So on the one hand, you're saying, okay, the consumer should decide best, but sometimes in this case, that might not be the case. So some regulation is important. But when it comes to e-commerce transactions, I think technology is at a point where we can assess the riskiness of a transaction much, much better than before. And do you really need to enforce a framework on who is risky and not when technology has reached a point? I mean, I don't see we are falling short of what the ideal outcome should be, right? With all the folks around the table.
There are exemptions, so we're able to apply for those exemptions if we can demonstrate that.
Correct, but it adds a cost on the ecosystem of merchants. So now, to get this up to speed and meet the regulatory bar, great for vendors because now we can have a new solution that is helping you with regulation. But I think that's an extra cost at this point, especially in the field where technology has already solved some of these problems, and you really need another sort of level of enforcing certain mandates.
We have about 3 minutes left, so if there are any questions from the floor, please do raise your hand, grab a mic, contribute to the conversation. I mean, I'd just like to close off with just a simple question. What one or two things would you recommend a merchant should do or prioritize this year when preparing for the effective date in September of SCA?
I'd say depending on the size of the merchant, but as I said during my presentation, I really think that that merchants should be looking to invest in a good infrastructure and in basically in preparing for data and for AI, and just trying to develop models in-house and seeing how you can progress, let's say.
So two things. I think firstly, fraud's not going to go anywhere. So if you're a hacker at the moment and the value of a European card is the same as anywhere else in the world, suddenly that will just shift and the hackers will just hack international cards more. So if you're selling internationally, you just need as much fraud detection because those international issuers are unlikely to have 3D Secure 2. So that fraud is still going to be there, it's just going to shift. But my advice, or the one thing that merchants should be doing, is making sure they still invest in fraud detection. And I think that has to be coupled with an overall view of what their strategy is for maximizing acceptance. And it's part risk analysis, it's part looking at how they maximize the exemptions. And there's a session that my CEO is doing at 2:30 in the other room this afternoon that's going to drill into that a bit more. So bit of a plug if you wanted to go to that as well.
Yeah, I will be in line with these recommendations. So invest in technology, invest in taking the opportunity to have more data in the years to come. So also from these kind of new protocols, we are having more data, we can make use of it, and invest also in real-time systems. So I see plenty of merchants out there who are still trusting, believing in, let's say, batch systems, monitoring, but the whole ecosystem is becoming faster. We are talking about P2P payments and so on, instant payments. This can get a huge, let's say, cost point if you don't also invest in that kind of real-time area.
I think infrastructure invest is standard, but I have two other points. One is at least you should have a few good employees which know about fraud. They don't grow on trees, so that's really a point, and they're rare. So if you can, buy one of the last and educate them. This is one. And the second, fraud always appears where you don't expect it. So really have a look at the gaps. I said it before. So really look at your processes. The colleague said it before. If you have no support center, yes, have a look if there's some support center in the net with your name on it. So really have a look. Okay, where may be gaps where fraudsters step in, because one is the fraud I accept and which I can manage. The other fraud would just appear and may damage my reputation or whatever. So, yeah.
Yeah, I would say, like, one line, if you're in the market for fraud solutions, try before you buy. There's a lot of noise around, a lot of buzzwords, and it's a changing landscape of regulations and enabling business. And sometimes certain things just don't work as well in your situation. So to the extent possible, make sure you do POCs, head-to-heads, or what have you. Because at the end of the day, you understand your business, you understand what your business goals are, and no matter what we say in terms of AI or ML, if it doesn't solve your problem, it doesn't matter. So to the extent possible, try before you buy.
Great. Okay. Well, thank you very much. I think we've come to the end of this session, this track. Thank you very much, gentlemen, and thank you.